What I want to show you with this trade is actually a trading system which I go into great detail in my swing trading CD-ROMs. These CD-ROMs explain how to trade relatively short-term windows, in other words, looking to make 30-40% in a week or two. And one of the systems which I cover quite a few. One of the systems I covered is Turtle Soup Plus One. Now let me explain what the rules of this system are. Basically, and I'll show you an example in a second, so don't worry if you can't keep up with this as we go through the text part. I'll show you the picture in a second. The market must make a new 20-day low. The prior 20-day low must have been at least 3 trading sessions earlier. The close of the new low, we call this day 1, must be at or below the previous 20-day low, and I'll show this in a second. An entry buy stop, in other words, the point at which you buy, is placed the very next day, that's day 2, at the earlier of the 2 20-day lows. If you're not filled on that day 2, trade is cancelled, and that's fine. Now, one amendment to this is often that is you ignore this final line. If you're not filled on day 2, the trade is cancelled. Well, actually, you could wait until day 3 or 4 and see what happens and wait to be filled. If the trade is triggered, place a protective stop 1 tick below the lower of either the day 1 low or the day 2 low. And again, relatively straightforward with that. The reversals are often short-lived, so you've got to take the profits within a few days. But I want to worry less about the exits for now. We're just looking at the entry setup. Now let me show you what I'm talking about with this. Cattles, which is a 5250 finance company. Here at point 1, you have a 20-day low. The preceding 20-day low is at least over 3 sessions time. I mean, because I've not drawn lines too clearly, but I know it looks like this is the 20-day low. In actual fact, it's not, because whilst the low here and the low here are exactly the same, this of course isn't a 20-day low, because it's only the equivalent of whatever, 1, 2, 3, 4, 5, 6, 7, 8 days in terms of lows. So this is the second 20-day low. And the entry point, as I mentioned, is just above the higher of the 2 20-day lows. So the entry point becomes here, which is this point here. Now it's supposed to be on day 2, this is day 2, that you enter if it goes there. But as I said, you could, although it's not as good a system, but nevertheless you could enter it a few days later, which in this case is here. So you enter at this point here, which is about 290.5, and that's your entry point. And as you can see, what happens then is the market shoots away. Now what's the thinking behind this type of system? One of many, as I've mentioned, which we look at in the swing trading CD-ROMs. The thinking is when a market makes a 20-day low and then reacts upwards to a point like this, it strongly suggests that it's actually going to continue ever higher. Because you see, a market can make a 20-day low and then it might bump up a little bit and then fall lower. And what we're saying here is, well, if it makes a 20-day low and bumps up sufficiently that it hits the preceding 20-day low, then it suggests that it's not just a false little bump up, but actually one which is a reversal, i.e. it's a sufficiently high bump up that it's a reversal, and of course with the reversal comes the rise up. You see, if we'd placed this anywhere else, for argument's sake, instead of up here as an entry point, let's say we said, oh, and the next day if it just moves up halfway up the previous day or whatever, the problem is the market may have gone down like this, jumped up a bit and still gone down. What we're saying is when it drops this far, 20-day low, and goes up to this point, and this point was determined by the preceding 20-day low, then it suggests it's going to continue higher. And anything less, such as this, or up to here, or anywhere else, suggests we don't have sufficient evidence and it may well go lower. Just playing the odds, it's not 100% correct all the time, but it's sufficient evidence very often that it will in actual fact move on up. So that's that one.